Good afternoon. Welcome everybody to our Sunday session where we're going to talk about the system, answer any of your questions, break down a couple of days that we traded this week, look around at some options and equity with our tools to talk about how our whole system works. Let's see, we'll start on Wednesday of last week. If we kind of zoom out. Okay, we open. The overnight session price drifts up to our top burger. Every day we're looking at this grid of levels that are plotted. And if we take a look here, let me turn off any drawings. There we go. So, no drawing sets, no key levels. Let's just look at just the tools, right? So when the cash session opens, we get our open level, which is this white hash line. That is the middle of the day, right? Right where we open, kind of the middle of our zone, our range for the day. We have our shaded level below and our shaded level above. These are, both of them, equal in their spread and how far they are from the open level. So basically everything that gets plotted up above is mirrored down below at the same rate, same levels, right? The lower level is our buy zone. That's kind of what led to me making this green shaded. And D-Force, if you can either mute yourself or turn yourself down, just because I'm getting a little feedback. Yes, white hash line is always daily open. And since we're on futures over here on the left, it's, they open way back at 6 p.m. the previous day, right? So, we see a lot of times where futures will move and it'll open kind of away from its overnight open level. But stuff like SPY, QQQ, SPX, they're all going to start this grid at cash session open. That's why when we look at SPYs and Qs pre-market, we don't see the grid for the day. And then once we get our first open print, the grid is laid out for us. So, you can see on this day, we ran into our upper shaded region, which is kind of our sell zone. Then it fell down to our lower shaded region, which is kind of our buy zone. You can see it slipped it a little, but then right back up. Makes it almost to the top shaded, we call this top burger. These shaded regions, we call them burger buns. It just was said one day and then it stuck. So, but you can see we did slip below our bottom burger just enough to tag this purple hash line, which is mirrored down below. You can't see it quite well because that was low of day, and so our red low of day level sits right on top of that purple line. So it did tag that, got back up into its open level, started to break out above the burger top, then came back and opened right around where it opened the previous night. So if we zoom in, we get our cash session open. It dips down to our buy zone. In this shaded region, the one that is above and below are open. The key level is the cyan line. That's why it's in the middle of the zone. But we have a top and bottom, so that this is a true zone, right? I have key levels, and if you've used like our supply demand tool that I offer for free, it will make zones around wicks. And you do that because, key levels are important, but there is also a range around that key level that is kind of the acceptable amount of noise that you will see. I only bring this all up just to say I always watch this key middle, and there's plenty of times it slips below and then holds lettuce or holds the purple below. But to me, even if we slip all that, when we get back to this key middle, it can be rejection. If we get through it, I expect us to pull back and hold it. So the cyan lines are really the key ones in these, right? Like when I say something's in the middle of the bottom burger, I'm really talking about that cyan line being a key level that it's trying to hold. And the shaded regions outside of that, or above and below the blue lines, are meant to be kind of acceptable noise, acceptable reaches for wicks, right? So we can see on this day during the cash session, we dipped down, pretty much got to that hash line, not quite, but in fact, I'm going to zoom in a little so we can see these candles a little better. We slip down and get to it, we bounce up to our open level, right? And if you look at this candle, we had a wick that came back and held the top of the zone. So we hit this, bounced up, next candle held a higher low and the top of our zone, takes off to open, hits the top shaded region. This is our sell zone. And it should just be thought of, we have an opening range. This opening range can give us information as price action bounces around to see what the trend is and which direction we might break out of opening range to get to our outer shaded region. The outer shaded region is usually the destination for any given normal day. Now, obviously on Friday, we saw a very big day, and so it pushed very far outside of its outer shaded region. But on most given days, the outer shaded region is the destination once we break out of our opening range. So, whenever we are pushing up to an outer shaded region, I'm locking profit at the bottom, I'm locking profit in the middle, and I'm usually out if we get to the mustard line. Now, I might leave a runner just to see if it keeps going, but most days, this outer shaded region, either the bottom, the middle, or the top, will end up being a reversal point. That doesn't necessarily always have to send us back to open, but it will cause a reversal, some profit taking, some reloading and positioning at some key level before heading back up to try to get even further. Hey, Ty, good to see you. I'm getting a little feedback from you. There you go, buddy. Thank you. So, you can see on this day, Wednesday of this last week, we got up to reaching outside of our burger top, then we came back, held that bottom level of it, pushed through those highs, carried through our purple hash line to our outer shaded region. We dip back and hold our burger top, kind of making an inverse head and shoulders right on that cyan line. So remember I said, in the middle of the shaded region, the cyan line is very important. We tried to hold it, slipped it just enough to tag that red one and trap shorts, and then popped right back up, keeping our shoulder at that blue line. We take off from there, hit our purple hashed, hang out for a second, try to get to the outer shaded region, and then come back to our purple hash to pretty much close the day. So I'm always trying to play from the blue lines to the purple hash, which is, this purple hash is just halfway between this blue line and the red line. It's basically like the midpoint in between getting from burger top to the outer shaded region. Am I watching price action on both the equity and the option? Yes, I usually will have, let me get this added right here. I will usually have a call and a put. Stop. I'll usually have a call and a put up while I'm watching equity so that I can gather information about all of them. What am I doing here? this back off. Let's look at SPX weekly 220824 put. We'll look at the 4120s. And let me go ahead and strip this. Actually, style, load style. If you guys don't know about styles, this is a quick little tip. Whenever you get something set up just right on your chart with just the tools you want, you can save that as a style and then load it. So like here's a fresh new chart. It still has theoretical price, which I have turned off on most of my normal styles that I used for options. Get this on there. So once I load the style, it'll load up all the tools I normally have that are up here. Except I gotta load Beast. There we go. And you know, right now we have just the Beast tool on, but yeah, I can load up the clouds and everything else that goes into, you know, what I watch during the day for trades. Load this. There we go. There we go. And let me get rid of this. Bada bing. So, we've got SPX, we've got ES, and I've got my call and my put. So, in the beginning of the day, when ES hits its burger bottom, gets up to its top, it goes back to open, then takes off, and all that time, we saw the 4150 call on SPX, open at its beast, just above its beast, basically drifted down into the middle of beast and kind of tagged the bottom, gets going a little bit outside of beast, rejects the trail line which was sitting above from those pre-market highs. The trail line keeps it down and it comes back into the beast zone before finally taking off and getting to our top burger bun, our region that we start selling, right? So at any point when we are playing Beast, we are trying to play it from our major Beast zone, which is the blue cyan, the red, I'm sorry, the blue cyan hash line, the red hash line with no shading. That is our major Beast zone. That is what leads the math behind all of these shaded regions. And that's, you know, what I like to think of as the weekly buy point. Because, you know, on SPX and SPY and Qs, we have multiple days a week of expiration, but on everything else, we have just Friday. So when I'm looking at Apple options, I am looking at Friday's options, and I think of the Beast zone, this non-shaded blue and red, as the major weekly buy level. So if I'm playing the 165 call on Apple, it's going to start usually the week above the Beast zone, and whenever it gets to the Beast zone, the non-shaded region, that's for the week the best price that I want to get it at. And then the shaded regions are burger bottom, burger top, outer shaded regions. Those are just intraday levels to help us as this contract, you know, lives its life, right? You know, for instance, these puts used to be worth $20 and they slowly made their way to zero. But as they made that journey, they tagged our key levels on this tool and provided trade opportunities. So that's what we look for. So on this day, on Wednesday, we bought at our Beast zone. ride those up, take profit up here, and then let it fall back. We do sometimes pick them up later in the day, especially if they are at something like our burger top, burger bottom, or buy zone. There are plenty of times during the day. Here, let's move to like the 40s. Maybe we'll see this a little better. Why is this whole thing? Do I still have the... Yeah, I do. That's why. Get rid of that. There we go. So yeah, we can see a little bit better now how this hit our beast zone, took off to our sell zone, then it comes and bases at our bottom burger. At top of that bottom burger, about 227, bases right there. It tries to get going, but we have that trail line above that comes down as resistance that sends it back to fully tap that 227. Then it takes off, gets to open level, another pull back to beast, a little past open, and then dies back to a buck. The reason I pulled up the 4140 is just to show how the beast level helped us earlier in the day. And then later in the day when they're stripping out premium because theta decay and all kinds of stuff, it's usually the next level below whatever we picked it up at. There's plenty of days where we pick it up at beast. We pick it up, at our burger bottom, we take it up to our burger top, then later in the day it's hitting beast and fighting all the way back. So that's just a brief example of how we try to buy at these key levels. All of these levels on the beast tool are meant to be used like support and resistance. Whenever we are below these levels, when we get to them, they can be where we reverse or pivot. Like here, we got below beast. It pops up to beast and can't get through. That's a good sign. It's probably going to pivot a little bit lower than where it just based to tag something else. That same with the trail line. That's why I pointed out, we couldn't get through the trail line. It sends us back. That trail line can be thought of the same way as support and resistance. So on this contract, when it started the day, it was at beast, below trail, messes around at beast, tries to get going. You can see these wicks slapping trail. It comes right back for another load, and then they take it further. This is how big money's algos work. They love to get in, have it work for a little bit, then bring it right back so they can reload for a bigger move. And it just seems to work quite well with our tools. Everything that's built into this beast tool, even the trail, that's what's holding us back. So there's plenty of times I'll buy at beast, and if we're getting to trail, I'm locking profit because we can come right back, pick it up again, and that's how their algos work. Calls worked. Let's do it again. If we look over at puts at the same time, right? Puts come down and try to base at burger bottom, and that whole time, we get our little pop here. It sends it through burger bottom to beast. There's a bounce here at beast at the exact same time that we're rejecting trail. It comes up to our burger bottom, rejects it at the same time that this is bouncing at beast. So it's, I try to think of this as like this is where these bots are reacting, right? All of this institutional trading, it's all algo driven. There are bots out there and they're reacting to these levels. And they're testing the waters. We open, they shift into calls, and it starts to work. Puts start to lose value. Those puts hit something key, like our beast zone. They start to bounce. Calls start to come back. We have pullback. Let's see, this would have been around right here. We pulled back to that burger top. Those puts couldn't get through. Everyone took profit. We are bouncing at our burger tops here. We're bouncing at our beast here. So they switch back into calls. They let those puts go down. And it's just a dance back and forth at these key levels. You know, the whole market is an auction, right? Buyers and sellers constantly pushing against each other. What is this? Oh, yeah, I'll have to mess with that later. Let's change it to a 35. Stop it. There we go. And let's see, when we ran into our outer shaded region up here at 41.55, let's look at the 40s, because those are probably going to be hitting beast. That's another thing, as we are pushing outside of our shaded regions, right? As we're pushing past our burger top to get to our outer shaded region. When we're getting up here, we should be moving our strike selection up to follow price action. Those 41.40s, you know, slip beast a little bit. I guess if we look at the 50s, we got the 41. Yeah, even better. Beast was down in that outer shaded region. Gets down to beast and the midline of that outer shaded region. Bounces from, what is that, $5 up to 18, 20-ish. Our purple hash line there kind of chops around that. Ultimately rejects it, comes back to beast, even gave another bounce and another pop at that end of day push, since those got in the money. Is this Wednesday on SPX? Yeah. Oh, okay, yeah, sorry. Their puts, it was that end of day dump. Come on, there we go. Yeah, that end of day dump took it from that mustard line and our, you know, basically our beast zone from like, 225 back up to 9 in the last 5 minutes. In fact, if we zoom in, yeah, in the last 5-minute candle of the day, from our beast zone, made a double and close. So, let's see. Let me catch up on the chat. Go over the tools. Any suggested newbie screen layout? Can barely see the trail line. I thought that I upped that on the Beast 4 tool. At any point though, you can right click on that trail line, go to edit. That trail line is called SETI5. You can change the width to make it thicker. Oh, you can barely see it on my screen, I see. But there you go, it's a little thicker now. I'll do that so that you can all see it a little better. Come on. Do the same here, SETI5, bump it up to 5, there we go. And yes, I even included for you guys that kind of shaded cloud that on the trail line that's kind of meant to be a warning, you know, when it enters this cloud, get ready, it could break the trail, it could also bounce. There's plenty of times that we see it bounce at that trail. And keep in mind this is a 5-minute. That trail line will look different on a 5-minute chart. On a 3-minute chart, on a 1-minute chart, it will look different. We change this to 1 minute. We'll see a little bit better example of holding that trail line, pulling back, and there would normally be a cloud here on your guys' tools. I'm using a different beast tool so that I can look at every option. You know, it's my auto tool basically, and that trail line comes up, follows price action. It's meant to be like a trailing stop. So like if you get in here at Beast, it starts to get over trail, you can put your trail stop there. If it takes off, gets to the next levels, we start to see that sideways action, that trail will level off, so you can bump your trail up there. Moves a little further, you bump your trail up, and then when it starts to break, you're already ready. You already got your sell order. So that's kind of the idea behind that trail tool, especially on a 1 minute. It's going to normally get, be underneath price action as it starts to move. It'll follow. As it gets below, it can be resistance until we get through. Then it should become support. That's why a lot of times you'll hear me say, it's not time for calls yet. A lot of times when I'm saying that, it's not time for this trade or that trade, it's because something like this will happen where it'll make a big drop and we've got trail way up here, like a moving average in a way, right? And we won't really get going again until that trail comes down to meet us. So when we sit here at Beast for a long time and the trail's getting closer and closer, that's when I'll start to be like, okay, I'm ready to take calls again, because then we can break through trail and get going again rather than fight up to it for rejections. There's a lot of times I'm not going to take the trade if I see it has limited potential, and so that trail, when we are below it, should be thought of as resistance. It's much like a moving average, much like, anything. So, does that answer everybody's hankering, questions around what are these levels? How do we use this? Our burger bottom is where we usually buy, our burger top is where we usually sell. But every level can be thought of as support and resistance. Like if we're late in the day looking for a trade, and I see us push really good up to this purple hash line, and I'm not in it yet, and I see us pull back and hold this purple hash line, I'm going long off of this purple hash line, and I'll be over on some option. Let's see these calls. Where's that? There, right about there. So when we had this pullback to the purple hash line, these contracts pulled back to Beast, started to get going, retested that low, making a double bottom. So you can risk here, knowing you're risking basically back to this lower Beast, which, what is this? It's about a dollar lower. So you're risking $1 because that's where it's going to dump to next is the lower Beast. Risking $1 for the chance to get back to open, which is about $3 up, back to this high, which is $4 up. So, at any point, I'm looking at every level and using that to gauge what am I risking against what am I trying to gain. So when it pulled back to this purple hash line, and I start to see it hold in green candles and a higher low, I'll be jumping in off of this purple hash line, which is not our normal buy zone, right? But we got above it. If it becomes support, it can send us from here to there. I can watch my contracts go from Beast zone over their open level through this recent high, a little higher. And frankly, there's a double right there. Call it $5 up to 10. There's a double right in that move, which was only 1, 2, 3, we'll call it 4 5-minute candles. 3-minute candles. So it's a 12-minute trade. And I know I'm risking from here to get to there. And I'm risking from, call it $5, risking down about a whole dollar to get, risking $1 to get up for a potential double for 500, right? So at any point, I'm using this to measure my risk and reward. I'm going in at $2 with the chance to get to 5. I'm going in at $5 with the chance to get to 10. and I'm risking down to that next level. Through that, I'm out. Or I'm risking off of this base, and we give it like a 40, 50%, depending on your risk tolerance, right? But for me, for any of us, I would think if you guys are playing SPX and buying, 10 contracts at $4, sometimes we're going to sit through drawdown. And if you take a shot at 227, have a stop that you are okay losing money on this trade. Every trade, frankly, every time I'm making a trade, I'm always saying to myself, I'm okay losing this much money on this trade. I'm taking a shot here. I think it's good risk. So I'm going to say, I'm okay losing $100 to see if this happens. And we've let it settle. We've gotten our confirmation. I'm taking a shot. You go over situations where an option bases in Beast a while, like it's going to reverse, and then tanks through Beast. Let's see. There are lots of times, I don't know if you guys notice this, where we base, try to get going, and then they dump it lower than where we based, not by a ton, then they get going again. So that you sat through this, oh, I forgot to take profit, oh, okay, it's back. And then, crap, it's dumping, oh, now it's right back again and it's going again. There's lots of times, even here, it hits this level, starts to get going, dumps through that level, and then it gets right back above. And all these people that started to freak out and sell because it was down 20 cents, 30 cents, 50 cents, whatever it is, they missed the move because they got out scared. For me, if I get in at a key level, again, I'm always saying I can handle this much loss. So let's say I get in at $2. I'm okay letting that go to 100. I'm okay letting that go from $2 to $1 for the chance that this gets going. And I'll even let it sit at $1. And once it starts to lose, then I'll still be like, okay, I'll let it go. There are times we gotta try this stuff. We gotta take our shots, right? And you can see we're below that trail line and it's flat. And we didn't really go anywhere. And then when it starts to come down is when, at the same time, we're coming up to meet it. We hold it. We take off. So, I guess to answer your question, those situations where I load at Beast or some level on this tool, if it starts to just tank, I always have an amount I'm okay losing in my head. And it might be where I put my stop. It might also be where I add. Sometimes instead of having a stop at $1, like I get in at $2, instead of having a stop at $1, I'll put in another buy. So if it hits $1, I'm average down. If I catch a little pop, I can get out of all of it and save, maybe even get out at a break even if it truly is going to tank. If it just tears through $1 when I added $1, I'm going to have a number okay in my head where I'm going to cut that. Call it 75 cents or whatever your risk tolerance is. I mean, I make that choice to cut it and change directions or hold it to see if it's going to work based on watching equity, calls, and puts. It all has to kind of make sense for me. Let's see, these were calls around 248. Or let's just zoom out again. It has to all make sense. So we hit Beast here and bounce at the same time on equity. We are in an uptrend. We are bouncing at our burger top. We have trend line from lows. I might even throw on moving averages. Come on at it. There we go. Yeah, market price action is going to dictate what decisions I make. So, for instance, we're in an uptrend. We're setting higher lows. If I draw a trend line, pullbacks are holding that trend line from lows. We get above our moving averages. We pull back, slip them just a teensy to tag this red level. Then we get right back above moving averages. So there are plenty of times where, like, if I'm not in this move, we pull back. I might enter right on this red line. When we're testing it once, twice, three times, then we're back above moving averages. Okay, it's going in my favor, so we're already good. I can set a stop. I can start moving it up. And then I'll let these moving averages carry us up to the next key levels. And once we start breaking these moving averages, I'm starting to think about change in trend, right? When we're hitting a key level and topping out, I'm already watching puts like, okay, we're at beast. Here's a good spot to load. You guys have heard me say every day, when we get near a high or a low, I'll be gauging it and I'll be saying, this is a good spot to risk. We are back at beast. This is where we should see sellers start to step in. And I'll say that for 20 minutes and we'll sit there at beast and then it'll take off, right? These key levels on our beast tool are going to coincide with key pivots throughout the day. So when we see puts get near beast at the same time that we're topping out near our outer shaded region, yeah, that is exactly what this whole system is built for. It should line up very nice like that. You can say, oh, well, that just happened on this day that we topped out here and we hit beast here. Well, we see this every single day. There are plenty of times those midday pullbacks or those mid-morning pullbacks come back to test open, come back to test beast top, or burger top, to keep going for further. There's plenty of times where we push so hard we get up to this outer shaded region, we only pull back a little, maybe to the bottom of it or to purple, and we get going outside of it. There's plenty of times where on a chop day, we're contained between burger bottom, burger top, and we're just playing the waves back and forth. And yeah, there are going to be times, just like on Friday, where we pick something up about where we should, and it does not go in our favor, and we have to change direction. We have to gauge an ability to get in and not like buy the top, right? Or short the bottom. And yeah, this cloud that I have, I'm going to share it with you guys for free here soon. Just to give you a brief explanation of it. It's meant to be thought of as 3-minute and 5-minute moving averages. It's basically the 8 and the 21 on the 3 and the 5 minute. But what you'll find if you start looking at moving averages on different time frames, the 8 moving average on a 5-minute time frame is technically this stair-steppy bottom of this cloud. It is between the 8 and 21 from a 3-minute. So if you guys weren't aware, moving averages can overlap each other if they're different time frames and different increments. So the 8-minute on the 8 moving average, 8-period moving average on a 5-minute sits between the 8 and the 21 on a 3-minute. It actually cuts their cloud in half. So I have made this tool to actually be specifically different than most moving average tools that you see, where they give you the 3 as a cloud between the 8 and the 21, and then the 5 as a cloud between blah, 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 blah. There would be overlap in those instances. And with this tool, I can come in and say, we're holding a 3 and a 5-minute trend going up. I can come in and say, show me an hourly, a 30-minute, hit OK, let that load. So our hourly and our 30-minute, we're kind of stacked on each other. We get above them. our 30-minute flipped bullish, our 1 hour flipped bullish. And on this big late day pullback, we get to it, can't get back out, slip a hair below, back above. So in a way, this tool is just meant to allow me to see different moving averages from different time frames. I have coded this tool to be exactly how I like it, to see, instead of a bunch of overlaps, I have made it consist of basically the 3-minute 8, the 5-minute 8, the 3-minute 21, the 5-minute 21. So in a way, it's, if we're in a strong uptrend, we should always bounce at the first cloud, and then when we start to change trend, we're going to lose the first cloud, try to hold the second cloud, or just give it out. There's plenty of times, well, like right here, we get going, we come back, we basically hold the lower cloud, only reaching out of it to tag the burger, and then we're back above, we're holding, we're bouncing. So I use this cloud to help gauge trend. It's just moving averages. That's all moving averages are really meant to do. It's to help you gauge trend, give you an idea of when we pull back, where we could bounce. And, if you guys are ever, interested, I mean, I spent probably a month deep diving into all of the mathematics behind moving averages to understand them very well. A moving average is your average price over so much time based on close. It's a little different if you use a simple or an exponential or a whole. They're all calculated with slightly different math. I've actually gone and reviewed all that math because I'm a nerd and I like this kind of stuff. It helps me in my coding to create these kinds of tools. So, yeah, we'll be handing out that cloud. Most likely, I'll share it today, but I just need to button up, I made changes a week ago that made it look slightly different. I changed the arrows that pop up because there are arrows that can help you. Blah, blah, blah. If we look at this cloud on Friday, since I know that's what's burning in people's minds. We were up here. It's all stacked bullish. We start to slip through. We can't get through. This is that algo reaction at 10. Pop all the way back up, even setting a new high a day. But look, all of these wicks brought us back, and all of these candles on a 3-minute could not close outside of this cloud. Rejection, rejection, rejection of this cloud. So that was a huge error that I made because we entered our calls. I think we let this happen. It pulled back and we started entering calls at our buy zone, which is normally what we should do. But one key thing that I was not really giving enough weight was we were underneath our cloud and it's stacked bearish, sorry. It's flipped over bearish as resistance, and we can't get through. Huge key sign, not only to us, but to large institution and big money algos. Can't get through moving averages means we're going to be rejecting those, right? Just like when we pull back, if every pullback is hitting those moving averages and bouncing, that's algos, and that's algos working, and that's telling us and those algos that calls keep working, upside keeps working, so they keep pouring in. As the day progressed, missed the big drop from the top down. I did, grab at certain points, just hopped in and grabbed pieces, right, keeping it tight. But then when things would settle, every time we got to the 3-minute or the 5-minute, rejection. And that's where I'm getting back into puts. And I'm getting back into puts. Blah, blah, blah. You can see every time we actually snuck through the 3-minute, there was a quick, stiff rejection of the 5-minute. And we're right back down for more. And then we just like every 3 minute was a rejection. Boom, rejection. Boom, rejection. That's just sustained selling, no real buying in sight. But I use that cloud to give me an idea of trend and to give me entries on a continuation of that trend. And I know you guys have heard me say, options love to move in doubles and halves. Yeah, like you said, you made some good money on the pop on Friday. Most things that I was watching call wise did make doubles. Then puts, obviously took off. But most of these trades, most days, whenever we get near a double, we should be very wary of, oh, this just doubled from my entry. I should absolutely be locking profit because they can cut it in half. There's plenty of times we pick stuff up at $1.50, it goes to $3, it comes back, 75 cents off of that $3 to like $2.25, maybe even $2. Then it gets going up to 4 or 5, But all throughout the day, at any given point, these beast tools, whatnot, are meant to be where we should load. In fact, let's just randomly pick some ticker. Let's go with Apple. Let's look at that Wednesday. We got up to 168 on that day a couple of times. Let's look at the 168s. Oh, well, 167 and a halves. I hate those halves. 2208, 26, call, 167.5. We'll look at it on Wednesday. And yeah. Every time we wanted to buy that, it was down in the burger bottom. It fought up to its open level and the previous day's open. I did forget to cover that. On this tool, we also mark the previous day's open with the smaller hash line, because that's where everything was centered yesterday. That is usually where a lot of contracts will have exchanged hands. So you can bet that level is going to be important. So we always track what yesterday's open was, because it's something that can, again, be a pivot point. Every level in this tool is a potential pivot point. So I know folks will ask all the time, are you buying at the top of the bottom burger? Are you waiting for the middle? Are you waiting for the bottom? The answer is yes. I know that that's open and arbitrary and vague, but it all depends on price action, right? And what's going on at any given moment. And this middle of the day pullback, when we hit our outer shaded region, the middle of it, and start to reverse and start to take out moving averages, my thought in my head is, first target, this purple hash line. Next target, the blue cyan line. And I'm thinking, if I'm shorting to that target, and if it keeps going, to the next target with my runner. And if it keeps going, back to open. But sorry, Apple, Wednesday, we slip down to burger bottom, start to bounce up, can't get through the previous day's open, that white line, so we go back down, make the H, getting close to that purple hash line, and when we're at that purple hash line, we zoom in to just this drive, we hit the bottom of our burger, what we call kind of the lettuce line, if this green part is the lettuce. So we almost got to that lettuce line, couldn't get through the middle of this burger, back to that lettuce line, and then we got through the middle and pulled back in its support, and we take off from there. From here, we got what, $1.15, let's call it. It gets up to $1.90. While Apple bounces from about that purple hash line up, finally getting through yesterday's open, comes back to make its support, and then travels up to our burger top and this cyan line in the middle, which is the key level in this burger top, burger bottom, right? You can also use all of these levels if you're not in the move yet and you're like, how can I get in this move? We're popping so strong, we're popping so strong. Well, I'll wait for this open level that we rejected 4 times. Let us get through to the next key thing, and when the pullback holds that open level, I'll jump in. And when this pullback, did not quite get to burger top, but that's where I'm going to have my order, and as it's pulling back, and as I see that, where were we? As I see that we're hitting yesterday's open and wicking, and hitting yesterday's open and wicking, then I'm going to be picking this up as close as I can to that burger top, $1.40, $1.42 to $1.50, right? You should just think, let's call it $1.40. I'm going to drop orders between $1.40 and $1.50. And on that pullback, you can see everybody was dropping orders between $1.40 and $1.50. Bounces. Then it takes off from $1.40, $1.50 up to $1.90. Not the best risk reward, but if you are wanting to trade this and you miss this first pop, you can use these key levels as we should see a pullback, because if you look at the previous part of the day, we dump below, we can't get through, we dump lower, we can't get through, we dump lower, we start to get through, now we're holding, now we're taking off. So I really am watching all of these levels and just risking off of them, against them, and watching that key things in price action. We are setting lower lows. Now we're getting through highs and setting a significant higher low. We're also holding this zone of today's open, yesterday's open, after we rejected it multiple times. So even though I missed the bottom, I'll pick it up here and carry it up to burger top. I won't get the whole move from $1.15, just call it $1.10 to $1.90, an 80-cent move, right? I'm not going to catch the whole thing, but I can get $1.40 to $1.90, still catch a good piece. So when folks are like, what's the trade right now? A lot of times, if you look at the moment, you can say, well, I'll risk off of this to get up to there, and that'll be risking this to get to there. The whole point is to help you measure on your equity and your options what you're risking off of and where you're trying to get to. And, much like this trail, I like to think of when I take these trades, I'm trying to get in at these key levels and let that trail carry me up. Let these moving averages carry us up. That's why sometimes I'll wait until we're above the moving averages. And it might seem like the teensiest of pullbacks, right? But once we get through, and we tap and keep trucking, I hop right in there, right? Or if we pull back, and right as we hit it, we start to pop, I'm getting in there. Getting in at moving average pullbacks because we've proven and now I'm ready to go. Or I'm risking at key levels knowing that it can go against me, but, this is ES, sorry. But, it gets to something key like the open for ES. On this day, what am I looking at? This is Thursday. On Thursday, ES was strong, got all the way to its outer shaded region, but then came back to its burger top for open. Quick dip to its open level, and then completes that whole journey in the first hour of the day. What took it all night to do. Don't start freezing on me. No, you're freezing on me. So, do we have any other questions? Yeah, tools and screen setup. So let's load all of my tools so that we can see what my equity charts look like normally. Thanks, Steve. Yeah, I'm going to continue to try to make these callouts clearer and clearer for folks. Let's go back to Wednesday. I got to bump up the days. There we go. Yeah, here's Wednesday. Let's turn off some signals. Go ahead and look at Thursday. All right, Thursday. So on Thursday, ES dips down, taps its open, runs up to our outer shaded region at the same time we've got our squeeze tops. As we try to teach, squeeze tops, squeeze bottoms, also good spots to risk, long or short. You can see we bounced up to squeeze tops. A 30-minute squeeze started to form at open and get thicker as the day went on. We rejected that 30-minute and what looks like a 4-hour squeeze top. We slipped down to the bottom of that 30-minute and our burger top. Back up to squeeze top. So you can see from burger top to outer shaded region, from squeeze bottom to squeeze top, then right back. From squeeze top to squeeze bottom, outer shaded back to top burger, holds, bounces, takes off from that purple line. It's when we're all locked up on our puts, tagging the bottom of the squeeze, getting back into calls, riding them up to the outer shaded. Excuse me. Let's look at Thursday on Apple. What was our price point? We'll look at the 170s. I'm just picking random days, random strikes, and seeing what the tools give me, right? Because I'm confident in this system. I know that every move on every day is going to be giving us a great opportunity off these levels. We open just a hair above beast, take right off, just like Apple did, opened, wicked just a hair to tag where VWAP was, and then took off past open. I know that the first few minutes of not everybody's ready to hop into a trade, but just thinking clearly about price action that I'm looking at right now, your 5-minute candle opens, dips just to VWAP, and some of these lows and this recent high dips down to that interaction and takes back off over open. That can be a signal. Like we started to go down, now we're going back over our open. I'm going to hop in long because we're going back over our open level. I don't know if that makes sense. Like just like when we get above something, when we start to break back below it, that's a good signal. Too short. We start to break back below, we come up to retest once and twice, but can't stay above. You can take entry on the break of the key thing, right? Anyway, these open just above our beast, take off from 30 cents up to $1.20. They got through our burger top to the purple hashed line just above, where they lose steam, come back to our burger top and hold. They are at burger top when we are hitting burger top over here and when we're hitting squeeze bottoms. So, when we go long up to squeeze tops, up to outer shaded regions, this is when I'm like, all right, everybody, you should be locking up profit. You should be watching puts. You should be ready for the reversal. We get it. We're riding puts down. And when we get near our burger top and our squeeze bottoms, you're going to hear me like, all right, folks, get ready to lock up. Probably time to start watching calls again, right? They make a big drop, can't get through VWAP, and make another drop. These calls, These calls come back to their beast, or their burger top. Bounce from 50 cents, they get all the way back to $1 near the end of the day, because you know how they've been lately. They've been saving the moves for the end of the day. And although, it sucks sometimes when we get in at 60 cents and we see it only go up a little and wait, and every pullback we're like, oh, it's just going to go against me. Sometimes we got to let things play out. Especially if the goal is to get from squeeze top to squeeze bottom or squeeze bottom to squeeze top. We got to let it play out. So if you get in here and it's going in your favor, you can absolutely lock profit at these levels. You can see we went from 60 cents to about 80, 85 cents where that purple line is, and then it sat and went back and forth between 70 and 80 cents, just getting tighter and tighter. Then it broke out. And I know how annoying it can be when it's like, oh, we nailed this 50, 60 cent entry, but I only locked it for $5, $6 because it wasn't doing anything. Well, that's just the wrong mentality to be having. You got in at a great price, you should lock some at a key thing, and then let it play out, because it never revisited our entry on this day, and it finally did make the move. So there's plenty of times when folks will be like, hey, what's the next trade? And I'll be like, we just got in. I'm still holding. It's still playing out. So the trade is what we just did. It's not done yet, right? Let's see. I'm checking on the chat. Going to be, yeah, taking breaks midday, very key. Are there trades all day? Yeah, there are trades. Do we have to be in all trades all day long? No. And have we seen plenty of times between, let's say, 11:30 and 1 o'clock where they really don't take it anywhere? They're just positioning and getting ready for the 1 o'clock move to get going. I'm sure if you go look almost every day, there's a point in the day from about 11 to 1, somewhere in there, where they really don't take us anywhere. And we're just retesting things and setting up, gathering information for the next move when we break out of this range. So those midday trades should just be thought of as we are probably going to be range bound, play the range until it breaks. On this day on Apple, we ran up, hit squeeze tops, fall down to burger bottoms. What day is this? The 25th. This would have been Thursday. Squeeze bottom, or I'm sorry, burger bottom, burger top, burger bottom, burger top. Oh, we're through. We're pulling back to make sure we're ready. And then we take off. So yeah, definitely good to take those midday breaks. It can save us from doing damage to our accounts. And yeah, I'm always going to try to stress, like, there are 3 trades per day. And we really shouldn't be trying to think that we want to trade 20 times a day. We should really be trying to say, I want to hit 3 good trades today, right? Look at every day as we go through these. 1 good leg, 2 good legs, 3 good legs, right? 1, 2, 3. And that's basically what we're going to get every day. Let's go back to another day. Give me a 5-day, 5-minute. Monday, 1, 2, 3. Tuesday, a little choppier. Here we go. 1, 2. And then when we're talking chop, you're kind of talking, decent trade, decent trade, decent trade, decent trade, decent, right? Like you might be trading a little more in chop, which we really should not be doing. We should be trying to hit 1 good trade, next good trade. And then when things get, settling into that midday chop, we maybe shouldn't be trading. And, if we go look at these trades on a Tuesday when things are still elevated because expiration's on Friday, yada, yada, this is probably moving contracts. Let's see, we're stuck in about a 10-point range. Yeah, I would say that most contracts are only moving like 25 to 50 cents. Like puts went up 50 cents, and now calls went up 50 cents, and then puts, and then call, like we should be trying to hit a good leg from squeeze bottom to squeeze top, and then from squeeze top to squeeze bottom. And then we should be kind of calming down and reading, can we get back up? Do we want to go further down? So trading less, very important. So what do the red arrows mean? Oh, so the arrows on Beast Tool are just meant to tell you we have crossed something. You'll get a red arrow when we cross the purple line at the top of a burger top. You'll get a red arrow when we cross the outer shaded region's red line. Let's go to I don't. We might not have done that on ES. We did on Wednesday or Thursday. So yeah, red arrow at the purple line and burger top. You'll also get the red arrow at the outer shaded regions, red line there. We get up to that outer shaded region, you're going to get those red lines. They're just meant to tell you, hey, we crossed this line. It's a visual indicator, visual management to tell you lock up your profits before it reverses. The green arrows will pop up when we are interacting with bottom burger or when we're interacting with beast. And not just we have crossed it, because you can see a green arrow did not pop up here. They are meant to pop up only when we see things in price action that say we are bouncing. Those are basically parameters. You know, something like high is breaking through or low is wicking and breaking back above. When the green arrows show up, it is meant to be not just that we're crossing. We are seeing some signs like low hits it and bounces back up off of it, that kind of thing. Green arrows will basically only pop up around burger bottoms. You can see this one's a little bit bigger, but price action was gapping around. So it got the signal, and the next print was gapped up here, so that's where they dropped. That's where it dropped the arrow. So green arrows will show up to tell you, not only are we near bottom burger, but we're starting to see bounces, potentially, in the price action, right? It's just a visual indicator to help. And the green, let's see, that green arrow popped up because the high started to break through beast, bottom beast. So it plots the arrow to say, we are bouncing right near this beast level. So hopefully that helps make sense. You have red arrows as it is trying to get through the purple line in the burger top. Does that make sense? D-Force? Okay, cool. Yeah, that answered your question. Good, good. And you know, there's lots of times when price action on options is floating in between all my levels. And you might say, well, what do you do then? There's lots of times where if it's in no man's land, I don't need to trade it, and I can wait or find something that is at its beast or at a key level on this beast tool, right? So, you know, as this drive is getting going to the upside, I'll be watching the 170s, 170s. And I'll be trying to get them near beast levels, but if I can't, I don't have to trade it. Maybe not the best example on these apples. What's something that moved this week? NVIDIA. Here we go. NVIDIA. Let's look at Thursday. So it opens around 169. I'm going to be watching, 172s, 175s. I can't remember if NVIDIA has them every price point right now. 175. So let's just look at those. Okay, I'm glad I actually pulled this one up. For the newer folks, when we a reoccurring thing on that we see on options contracts when we are going to have a good strong move, upside or downside, we'll see our options contracts from open shoot up to burger top, and then they'll come back and hold that open level. Sometimes we get it once and twice and even a third time, but it's a pattern that we watch out for on options, and the beast tool helps us a lot by plotting that open level right when it appears, because these candles can quickly pop up to burger top, and then we're looking for that retest of open to potentially load there, especially if we don't have beast just below. There's a little bit of room between burger and open, and if beast is somewhere below there or whatever, when we see an option pop straight up to burger top, come back and hold open, get back to burger top, come back and hold open, there's lots of times where we are loading at those open retests because it is telling us we have the potential for a very strong move in that direction. So something to watch out for. Obviously if we start to give out that open, that thesis, that pattern is not going to work. It's not like, basically just saying there are plenty of days where we see options open, come and they drop down to their bottom burger and settle for a little while before taking off in our buy zone. There's other times where they open, pop straight up, run into our resistance, come back and hold open, and we're buying those open levels. That's why I say each of these levels should be thought of as support and resistance, and when it keeps showing you support, it's worth trying an entry at that support to get to the targets on the tool, right? So I picked a random ticker on this day, saw that we opened near 168. The outer shaded region has 175 in it. So I pull up the 175s and we see a pattern like holding open and moving from these open around 90 some cents. From 90 cents up to $5, right? And if you look in all this, what are we on? We're on a 1 minute here. Yeah, let's just switch it to a 5 minute. All right. So you can see the video opens way down here, pops all the way up here. There's a little pullback to VWAP, which is still about $2 above where it opened. So moves up from 168 to 172. Moves up $4, pulls back $2. And they take those contracts and that pullback almost back to their open level. And basically back to low of that candle. It's so hard to see the first candle sometimes. There we go. So they bring that that option from 90 cents to $2 and then back to $1.20 before letting it go up to 3, 4, 5. Let's see if we can find another example. What did it do on Wednesday? Ooh, yeah, better on Wednesday. What day is this? Yeah, okay, Wednesday. Let's look at these the previous day. On Wednesday, we get that pop up to burger top, then a dump through open, almost getting to that burger bottom, held $3, took off to just a hair above burger top, 4.7 from $3. Anyway. Okay, yeah, D-Force sounds good. Feel free to ask, or feel free to send any questions to me. Is he probably already gone? Oh no, he's still here. Yeah, I mean, let me know specifically what you're looking for about tools and setup and stuff like that. I mean, setup, I'm always watching equity and a call and a put. So I've shared a few screen setups where I have an equity chart and then a call and a put, maybe above, right next to each other. I think I've shared one where I had, 1, 2, 3, 1, 2, 3. I put my equities in the middle, calls and puts on the side. But I am always going to have a call and a put up while I'm watching equity so that I can see how things are reacting when we get to buy levels on calls and puts. All right, any other questions? We've been at this about an hour and a half. I'm probably going to wrap up here as well, but just want to give folks the chance to ask anything they want. Basically, when we are dipping down to burger bottom, calls are usually hitting burger bottom. It's when we're risking long. Plenty of days when we get to burger top, we're locking up profits. We're watching those puts. On down days, we will see things open, pop up to burger tops, and reject, and then take out burger bottoms and head down. We've also seen down days where it slips down to burger bottom, can't get going through open, starts setting new lows in burger bottom, can't get through burger bottom's top, gives out burger bottom, heads to outer shaded. On up days, we've seen plenty where we open, slap burger top, come back to burger bottom, then we get through burger top and keep going to outer shaded or squeeze clouds. There's been up days where we shoot straight up, we hit burger top, we come back and hold open, we take off, setting new highs and going further. We've seen up days where, frankly, we dip down to our burger bottom and sometimes even wick down to our purple, but get right back to our burger bottom and take off up through our burger top, blah, 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 blah. So you get used to watching these levels. You get used to going along at certain ones, like burger bottom, locking up profit at top, looking at puts here, maybe trying a put or getting one as a hedge in case the calls you're holding aren't going to continue. Basically, these cyan lines is where I'm reacting and taking risk. When we fall to a squeeze bottom and burger bottom to start the day, that's where a lot of people in retail and whatnot, when they don't have these squeezes and they don't have these beast tools, they just see, oh, we're tanking. Lower low, lower low. So hop into puts. And that's where we and institutions are hitting key things like burger bottoms and squeeze clouds. And we know that they're about to bounce it. Because there's just too much support and for it to get through when we see this. Just like when we start to get going to the upside and we run into 4 different time frames, squeeze tops, we know it's going to be a struggle to get through and we can reverse. So we'll be picking up puts there. And you might get into the squeeze, right? And you're looking at puts, you start to see it slip, so you get in, and then it pushes a little higher into the squeeze. There's plenty of times where I'm not freaking out because I bought the first pullback getting into puts. When it pops a little higher, I'm watching that original high, and as we start to lose and go back through it, I'm adding to those puts. And they're usually a little cheaper because it just popped up a little more, right? I know it's kind of hard to see the price action with all of these squeeze clouds. So that's why plenty of times throughout the day, when we start to push into clouds, I'll start getting rid of some. I don't need 4 clouds on top of each other to let me know this is where the resistance is. So I'll shed a few of them so I can see the price action better. And I never know what your original training is in trading, right? This is kind of like a head and shoulders pattern. Maybe you folks don't even know what that is. But we get up to this squeeze top. We start to set highs we can't get through. Teensy pullback. Pop a hair higher. Right back. And then still can't get through those original highs. So there are patterns and candlesticks that will lead me to make decisions or trades. We dump down, start to get going, start to slip, but we set a higher low. That's a pattern that will allow me to go along. When I see us make a big dump and then get going, set a higher low, start to take out that high. We even had on a pullback where we pretty much held that high. So there's a whole bunch around just candlestick patterns that I don't even know, what you guys know and what you don't know. So there's whole classes I could give on reading price action, on candlestick patterns, on moving averages, on this, that, or the other. But for the most part, our system is meant to give you key mathematical levels that are going to be important for the day. You'll see time and time again where we will interact at these beast levels, at this burger top, burger bottom. We bounced up to here, reject there, we get below, rejection, below, rejection. This is where we are going to see price action interact. So as you start to see it day after day, you know where to risk. We've got all these squeeze bottoms in our purple hash line. So when we get to our purple hash line and our squeeze bottoms, I'm taking shots on longs. I'm locking them up at the next key thing, this cyan line. I might short it back down to that purple hash line and the squeeze bottom. And then I'm going to go long again back to the cyan line and VWAP. Then I'm going to go short again to purple hash, then long again to cyan, VWAP. Short to purple hash, right? I'm risking off of these levels repeatedly. And I'm doing the same thing over on the options. So, hopefully this was helpful for everybody. We can do more sessions like this. Don't want to, tie up. I already tie up so much of your guys' time through the week. And don't want to always be doing weekend things, but we can definitely start fitting in some more sessions together like this to answer any of your questions. I gotta say, I don't feel like there were a ton of questions today. So, definitely, folks, use that. We have a channel called Beast Questions, so start filling that with questions around this system if you're unsure about anything. And we will help. We're always here to answer your questions and help. I'm going to stop this video because it's an hour and a half long. So I'll post this video for everybody on YouTube and drop the link in here. But thanks for tuning in.